On YouTube, we'll be pushing the record button here as quickly as possible. I encourage everybody, if you are not a member of the YouTube thing, is go ahead over and join the YouTube. I do post some videos over there that are different than the ones on the regular active trend trading website. Button here as quickly as possible. Okay, we're live and shared our screen. Okay, good afternoon, everybody. This is Dennis Wilborn, founder of Active Trend Trading. Welcome to How to Make Money Trading Stocks. We are in the throes of a who knows what comes next type of situation. There's a lot of angst going on in the market right now, and what exactly is holding up the market and pushing it forward? Yes, there's some earnings things going on, and some of the stocks are looking strong, but is there an underlying softness that could get us in trouble? I know Steve and I were just talking about that. We'll basically take a look and see if the charts tell us anything. And so again, remember that what we provide is for trading purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. So here's where we're sitting in our index analysis year to date. This is where Active Trend Trading is doing percent-wise year to date. And so we're up compared to the S&P 39%. And basically, the S&P is now up nicely for the year, about 3.5%. The NASDAQ clearly banging it out of the park. Dow Jones lagging, and the Russell lagging even more. The thing about it is with the Russell, what's interesting is it is now the leading index, if you will, and I'll show you a chart that basically reflects that. Hi, Barbara, how you doing? And so here we go. Let's see what the charts have to tell us. So here I'm looking at the spiders. I have a daily chart on the right, a weekly chart on the left. As you can see, we are punching up. The spiders are punching up towards, get my drawing tools out here. Maybe I'll get my drawing tools out here. Well, heck. And anyway, we're basically, I'm trying to get my drawing tools up here. There we go. Got a little bit of bandwidth issue going on here. There we go. Okay, here's what I wanted to basically to point out. This is the S&P. One, you look for bearish type of indicator. We've got a bearish army handling on the daily chart. We have price actually moving up towards this past high, still slightly short of it. So we know we have strong resistance up there at about the 340 level. And so prices could either, roll over from here or push on higher, break on up through that. One of the things that the S&P is doing, similar to what some of the other indexes are doing, is watch these nice little pullbacks. It's running up towards the upper part of the Keltner channel, pulling back to the 20-day line, running up to the Keltner channel, pulling back to the 20-day line, running up. And so with this kind of pattern, what I'd be expecting next week is to get a pullback back into around the moving average that's been respecting for the longest time here, which in this case turns out to be the 20. I see that, and one of the things you want to keep an eye on, let me get rid of those. One thing you want to keep an eye on is lead your shots. If you do estimates, or if you ever shot a shotgun or something like that, you want to basically, when you're shooting skeet, you want to lead you shoot where the little disc is going to be, rather than, behind it. And so oftentimes people say, well, I'm going to trade the moving average, and which is really good. And so they come to this day right here, which is today, and it gives, there's your price action, moving average. There you get a level for your moving average, and they'll look towards trading their moving average, target of getting in at that point. But looking at the chart, what's the moving average doing? It's moving up from the left to right. And so what you can do is kind of, well, that's not a very good way to do that, Dennis. Yeah, let's use a straight line. Is just basically just drill a little bit of geometry. Right here, draw a parallel line to the underlying moving average line. That's the in that case, that's the 8. The 20 is going to be coming up through here. And get an approximation so that as you're looking at it and going through the days in your analysis, you're looking at a place where you estimate where the moving average is going to be. And so what I'm seeing here is that basically we could get a pullback all the way to the 20-day moving average, and probably have it correspond with this date out here where it crosses these past highs. So where, approximately where is that? That is on the 13th, which is the 13th is next Thursday. And that's the way you kind of do your estimating for, target shooting for entering either long calls, or puts, or buying the entity itself, or doing some kind of spread on that. But that's what the spiders are doing. We're going to be talking about that a lot tomorrow at the Bay Area Moneymakers meeting at 9 o'clock Pacific time. And go on over here to the next chart, which is QQQ. Okay, weekly chart on QQQ. We are getting negative divergence. In other words, these highs here are lower than these highs here, even though the index itself is making a fresh new high. On a weekly chart, we are getting a shooting star type pattern with the wicks above the body, and the wicks being 2 times as long. But are we expecting it to fall out of the sky and do real damage? Not at this point yet. We have no indication that that's going to happen. Have a quasi bearish engulfing on the daily chart on the Qs. But again, you can project out, where does the, like the 20-day moving average line or this moving average line, where does it coincide with past support and resistance? It gives you a little clue about where, if prices get to that level at that time frame, that can be a really good green light for you to go ahead and get into a trade. If it fails at that point, that's telling you, hey, the weakness is larger than we anticipated, and just stand by to the downside. Now I'm going to show 2 things on IWM. Oh, the one thing on the Qs. The Qs are down right now for the day. The S&P is, let me double check. Yeah, the S&P is down right now for the day. IWM, however, which has been the slow moving of all the indexes, is not down for the day. It basically is doing, it's actually trying to do a little breakout here of these past highs earlier in the summer. And it's looking very positive. TSI climbing to new highs, market forecast moving to new highs, and same on the weekly and the daily. I would anticipate, here's what I'm anticipating. If this is a good long-term move on IWM, watch for the pullback into the moving averages, where again, do that projection out to get some numbers, and I'll do one on the, again, look and see which of the moving averages that the price action has respected. And clearly you see the golden line there, that's the 50. It's respected that 1, 2, 3 times. And more than that, if you count all the double hits, the last time down, it respected the 20. So I can basically just draw in here. Maybe, there we go. There's my projection on my 20-day moving average. Here's my projection on my approximate, my 50-day moving average. And so, and if I could see, if we just line up that right there, I can see if price action pulls back down around Monday or Tuesday of next week. It's showing us on this, no, it's actually showing us where. On 8/10, which is Monday of next week, if we drop to that level, that may provide a nice little bounce to the upside. Again, it's just coming back, it's filling back to support and then moving higher. The one thing that I want to show you, highlight to this, is if you are a person who trades also the leverage ETFs, I want you to keep an eyeball on this particular point right here. And this is where I'm always talking about contango and backwardation. If I go forward to the three times the leverage ETF on IWM, which is TNA, as you can see on the 2nd of March, we basically started breaking down, but there was a point there. We had a nice little, support or resistance bounce down. Now we are breaking through that. What do we see when we compare that to TNA, which should, if it was a 1-for-1 comparison, you would say, okay, I should see the same thing. But as you can see, here's that point from March 3rd, right there. Look how much further down the price action on TNA is compared to that. A matter of fact, if TNA was to run back up to that upper level, the run on TNA would be very, and I'll just take it from the top of today's TNA. There we go. That would be a 60% run. But the high point I want to bring home to everybody is that when you're trading the leverage ETFs, it is a great idea to see what's going on with the underlying ETF, because oftentimes the underlying ETF actually gives you a more true picture of what the actual index is doing. And as you can see from this, on the non-leveraged ETFs, IWM, you are above all the moving averages, and it looks like it's in gear to move higher. So, hey, that's what I've got, Steve. What stock are you gonna? Where'd Steve go?
Sorry about that. My mouse wasn't letting me get to the unmute button.
Okay,
I've got a couple of things to look at. Earlier in the day, I was really liking Google, G-O-G-G-L. It's deteriorated somewhat, but I think it's something to watch for a trade maybe on Monday.
Okay.
I think the important issue is we must hold the 50-period moving average, which is the, I was going to say my line is green, but I guess it's your.
It's right there.
Yeah.
It's the golden line.
Yeah. We need to hold the 50 on a daily chart and make sure we do not breach. And if we do that, and we could trade down toward the 50, have buyers come in, then I think it'll be a good entry place.
Okay.
For Google. I also like SFM, so Sprouts Fresh Market, I think it's called SFM. It's looking very good. It's at the 50-period moving average on the daily. It's looking like it's putting in an attempt to get a bullish engulfing pattern in place.
Okay. Yep.
And I like how it's looking, and I would probably do a trade on Monday. If the strength can hold. So that's
okay.
it.
No, that's And so, and one thing I'll throw out there, Steve, as another potential is this has been a strong mover over the years, and it's doing a pretty deep pullback, but it is Vertex.
Yeah.
As you see, it basically is doing a very nice little flag down. And let's see, I like it better down here about the 270 to 264 level.
Yeah.
For a retest and then possible bounce back up. It's in a strong uptrend, just basically coming kind of pulling back to where it did a breakout level at 261. So that would be kind of my area where I'd be looking to get in. So awesome.
Yeah.
And so let me check all the messages. Okay. Well, there you go, guys. You've got 3 different stocks you can kind of take a look at. They're all in the process of pulling back a little bit. And but it gives you something to look at over the weekend. And then, of course, I will be posting the Power Ranked Elite list, which I provide for free newsletter members, and then also the top 5 list on this weekend, so you can be ready to trade going forward. I know several of you are trading the top 5 and enjoying it so far. It's been really, we've been target shooting the entries and getting out with a 5 to 17% gain on the positions, and it's turning into a longer term holding list. And so I'm very pleased that how well it is in fact doing. And so I know
Dennis, I've got a quick question for you, and maybe it's a question maybe for next time. I'm getting a little bit, there's nothing happening that's turning me bearish, but I'm getting nervous with the extent of the current moves in the market.
Yeah.
How do you decide when to stop putting on new positions or curtail that or temporarily curtail it? I mean, as long as it's openly bullish, do you continue to put on positions, or do you pull back on that tendency?
What if I'm sensing we're approaching a place where we could get a turnaround to the downside? I'll reduce my position size. I'll go with a half position.
But you will still put them on.
But I'll still take, the trade triggers.
Yeah. Okay.
Okay. Because
I'm struggling with that issue right now. I'm feeling like, I don't have any reason to be strongly bearish, but I'm just, I'm finding fewer setups, and the performance is starting to deteriorate a little bit in the open positions, and it hasn't triggered my sell rules, but I'm getting nervous about it all.
Yeah. Well, Bill and Neil talks about if you get to that place where you just don't feel comfortable or something's going on in the market you're just not sure of, you basically start pulling back your positions.
Right.
Since the NASDAQ has been the leader throughout this, almost for the last 2 years,
right,
the weakness that it's showing, I'm very much aware of that.
Mm-hmm.
And since we have a lot of things extended, I'm cautious from the evidence, but I put out my cautiousness by trading a smaller size position.
Mm-hmm.
And also I'll trade, rather than taking a 5% stop loss, which is my normal plan, I will look for other technical places to take stop losses so that I can bring in that stop loss where it's 3-4% rather than the max that I can have.
Right.
And because we want to protect our capital and be ready to trade.
Yeah.
Cool. Good
Okay,
question.
good. Thank you.
Okay. Let me, where am I? There we are. So, hey, we'll wrap this up, and just remember that our objective of active trend trading is to provide traders with top-notch market analysis every week, timely and actionable intel that clarifies and simplifies the trading decisions to provide multiply your profits and minimize your risk. If you ever thinking about a trade, you want to, just say, hey, Dennis, just let me see what you're doing there with that particular trade, especially on the Power Ranked Elite or for the top 5 members or premium members. Shoot me an email. Don't send me a text saying, what do you think of this trade? No, send me an email and say, hey, here's what I think this is. Here's where I think it's going. And, explain your plan to me, and I'll respond back to you. No problem. So the way I'm deeming today's market is mixed market. Is it just resting, or are we having a sign of weakness? Steve brought our stocks today. Great job. Hey, learn to focus on the process. The profits will flow. I'm reading Dr. Elder's new Trading for a Living book. And one of the things that he talks about, the biggest thing that keeps the amateur trader from really punching it over the line to become more professional, or at least a more consistent winning trader, is one big thing, is not only having a plan to trade, but actually executing your plan to trade. In other words, and so the question I have for today as we move forward is, do you always follow your rules? You can answer just in the comments section, or in the comments on YouTube. So the answer is yes or no. Yes, it has. It has been revised. And it's actually, it's pretty good. I read his first book, wherever it came on. And so, hey, remember, if you're just joining on YouTube, subscribe, hit the bell to be notified of new content, and give us a thumbs up, or a shout out, and share us with your friends. And again, if you're interested in finding out one of the entry level ways of getting involved with active trend trading, where you get some of our technical analysis, the simplest way is just utilize the Power Rank Elite Top 5. I developed the Power Rank Elite, which is the best stocks off of 13 premium stock lists that IBD puts out. And then I go through a few more rigmaroles to come up with a good technical picture for 5 stocks every week, so that you're all set to be able to trade though. Yeah, oops, what happened? Oh, I know it. I was supposed to say. So if you're looking for a great way to get yourself going, engage AutoPilot. So anyway, that's basically it for today. I hope by next weekend, my back is feeling a lot better, and this infection is under control. Yeah, it's the infection thing is I have to go in and get a infusion of antibiotic shot through this thing, intravenous thing, once a day for 6 weeks. So I'm excited. Anyway, hey, there's where our next video is going to show up. We did complete the video series on basically the biggest mistake traders make to destroy their profits. That is now complete. It's a 6-session video in 6 sessions. So that's all we've got for today, guys. And again, if you haven't subscribed to YouTube, hit the button, hit the bell, and leave us a comment and a thumbs up. So Steve, thank you very much for your awesome help and the stocks you picked. And everybody, have a wonderful weekend. God bless and aloha.